MONEYME is scaling fast and doing it a little bit differently. The digital lender has just posted another strong trading update with its loan book pushing toward $1.9 billion. Credit losses are improving and margins are lifting as funding costs fall. At the same time, it's doubling down on secured lending, expanding its auto pay platform, and gearing up to launch new credit card products. The question for investors now: is this growth translating into sustainable returns? So joining me to talk about the credit landscape and it all is MONEYME CEO Clayton Howes. Clayton, welcome. Thanks for joining us.
Great to be here. Thank you.
Look, a strong results set of numbers put out today. You're growing the loan book very strongly. So talk to us about how you are sure you are growing the quality as well as volume.
We had a 325 million origination quarter. That's up 43% year on year. Now what's driving that is a shift to a higher quality credit segment as well as secured asset finance. So our mix of secured asset finance is 60%. That's a strong balance of strong returns and strong security. Now mind you, our loan book now has taken us from that 1.75 billion to 1.9 billion at the end of this quarter. And that 1.9 billion is a 29% uplift on last year.
Well, sounds good. And credit losses, I think importantly, it's to talk about those, are improving. So how much of that is, structural versus the type of credit environment we're in right now?
We've driven a very clear strategy, and that is to increase our credit score profile of our borrowers, increase that secured assets, and with time that we're seeing very clearly now is that our loss rates are coming down. So we're creating this positive effect on our margin basis. Now here's also the other bit that's important. We're primarily a variable rate credit card and personal loan and auto finance book. That allows us to move with risk, move with the macro climate, including RBA rate changes.
Now, has that sort of strategic shift towards secured been driven by, I suppose, the cyclical nature of the business, or is it, some sort of a bigger strategic pivot? Like, what's behind that?
There was this fundamental, and that was the auto finance was driven by banks lending procedures that were clunky. They were 8 days to get a car from decision of purchase to driving it out of a showroom. And we wanted to change that. And we created technology that enabled us to originate car finance and allow that person to drive out of that showroom in under 60 minutes. And so that drove our strong innovation and adaptation to what we saw as a challenger mindset where technology was going to win. Banks have retreated from that sector, and it's just happened really well for us that we're winning market share. We're growing the secured asset book, we're winning customers. The dealerships love us because imagine them, they're selling cars on a Saturday and the car's leaving their showroom in an hour. So it's really working with this innovation and challenger mindset. And not only is it just the cars, but personal loans and our new product credit cards that we've launched, which is a cashback rewards credit card, rated as number one already by Finder as the number one cashback credit card in Australia. It's the innovation that's driving this structural benefit that we've got.
Yeah, I can hear the enthusiasm in your voice. So the credit card launch is a big one. What does success look like in sort of a year, 2 years?
Well, we've got this belief that scale drives significant benefits for our ecosystem. We get cheaper funding costs, which we've been doing already. So right now we've just established and secured a 75 basis points lower cost of finance for our corporate facility. That's meaningful for us. So as we grow and add scale, we get cheaper. We're able to compete with the banks on price. And right now, what we've got is a secured asset car finance, credit card portfolio, personal loans. We're actually winning the total consumer's need for consumer credit. And so our continuation over a long time is being more relevant, more places, more convenient, and creating value propositions that customers love.
Yeah, you talked about that auto sales or auto pay segment. So how big could that get, especially in private car sales? Like, do you have any sort of...
It's huge.
Yeah.
We're less than 1% of the current market share. We're growing quick, but it's huge. The Australian auto finance market that's now being propped up quite significantly by EVs. Everyone's an EV.
Yeah.
And the EVs are setting a price that's slightly higher than the ICE vehicles. Mm-hmm. And so as financiers, we're more relevant. We've got a larger a larger portfolio to service, and that's just winning, collectively. What's also really fascinating for us is that not only is scale driving these significant margin benefits, but banks are giving us the opportunity to participate, where they're not just waving the white flag, but they're participating by giving us access to wholesale finance. And that's giving us a really strong foothold here.
One thing that I think is really interesting is this Luxury Escapes partnership. So going back to sort of the credit card innovation conversation, how do you see this playing out?
Do you know what's amazing? They came to us with this value proposition. They want to give their customers the $20,000 to $30,000, experience of a lifetime. And customers like to put these things on credit propositions, and they've got other buy now, pay laters, but it doesn't quite fit the bill. And so for us, a partnership with Luxury Escapes, who's got a tremendous connection with their customers, wants to add loyalty back to their customers. And let's all be serious here. Frequent flyer miles are getting further and further from our heart and mindset of trusting what value that is. Luxury Escapes is trying to change that. They want us to have a credit card that they can create Luxury Escapes rewards that are meaningful for their customers. So it's a really interesting, compelling partnership. And they've got millions of customers. And we're pretty excited. We think this is going to launch just sometime in this current quarter that we're in now. And so watch and see.
Yeah, well, I get Luxury Escapes emails, so I will be keeping my eye on that one. So investors have heard growth stories before. So if I'm an investor, what is one sort of key metric that I should pay attention to really be able to judge where we're getting to when it comes to MONEYME's growth?
This is the clincher for this result today. We're now, in this quarter, profitable. So our normalized NPAT is now profitable. So we presented this business model that says scale is an important part for us to reach a profit status. And so this quarter was a profitable quarter. So we can generate our own cash, and we can actually fuel our investment for these growth profiles that we're talking about. So when you think about the MONEYME value proposition, we're a tech native. So AI is adopted in our business from faster credit decisioning, marketing smarts and operational efficiencies, and that's getting really, really exciting for a digital business like us. We're growing. Our growth was 43% year on originations. That's very exciting. So we're a hyper growth business, and we've got a corporate facility that will allow us to grow quite significantly to those lofty heights. So profit's now a thing that we can start talking about.
Okay, and investors love profitability.
I think so.